welcome and thank you for watching the video. This video today is part of the house buying guide series. I did make a note at the end of the previous video stating that I would expand further on some concepts that I think might be helpful to some people. And this one is the first of that series. In this video, I am going to talk about checking your credit because checking your credit is supposed to be in the planning stages well before you buy a house. So I'm going to talk about the importance of knowing your credit before buying a house. I'm going to discuss credit history. So what is credit history, what it consists of, and how to check it. I'm going to discuss credit scores, what a credit score is, what a credit score consists of, and how to check it, the different types of credit scores, and towards the end, I'm going to provide you with some additional information that I think might be helpful. But first, here's a little bit about me. Hi, welcome to my channel. Thank you for watching. Here's a little bit about me. My household consists of myself, my husband, and my toddler. My mom also lives with us, but she's not included in our finances. We live in a high cost of living city in the Northeast. My husband and I both went to graduate school, but fortunately, we no longer have student loan debt. I work in banking and he works in aviation. I take care of the family's finances and I love my role as the self-appointed CFO. I love to talk about all things money, whether it's investing, saving, or making money. I look forward to sharing a wealth building journey with you. I look forward to getting to know you, and I hope you enjoyed this video. Why should you know your credit score? Why does your credit score matter? Well, in 2021, the median house price in the United States was $347,000. And that is for the entire country. That doesn't include the coasts. That doesn't include places like New York City, Southern California, DC, Boston, South Florida, Austin, etc. I don't know about you, but I don't have that kind of money laying around to buy a house in cash. That means the vast majority of people get a house by using a mortgage. The most recent data that I found was from 2020, and it indicated that most houses are bought with a mortgage. Only 30% of houses are paid for in cash. Since you're going to borrow in order to acquire a house, lenders want to confirm your ability to repay the loan. That's pretty typical. If you're going to lend somebody money, you have to make sure that they can pay you back. More specifically, lending standards have tightened since the Great Recession. A key component of the Great Recession was actually the subprime mortgage crisis, when a lot of people defaulted on their loans after the housing bubble burst. As a result, tightening lending standards mean that not just anybody can get a loan like you were able to get a loan in the early 2000s. And here comes your credit history. Your credit history is defined as the ongoing documentation of how you repay your obligations. It includes information about the number and types of credit accounts that you have, how long you've had each account, how much money you owe, how much of the available credit that you have that you've used, whether or not your bills are paid on time, the number of credit inquiries you've had recently, and it also includes public records information like bankruptcies, liens, and judgments. If your credit history determines your ability to repay your debt, given the fact that lenders want to know how you repay your debt, looking at your credit history is how they achieve that. But lenders are not the only people who can check your credit history. You can check your own credit history. By law, you are guaranteed access to one report per year from each of the 3 credit bureaus. The credit bureaus are Equifax, Experian, and TransUnion. You can either get all 3 reports at once. The benefit of that is that you are able to compare the reports and see if there are any mistakes or any discrepancies between the 3 reports. But the drawback is once you pull that report, you have to wait another year to look at it again. You also have the option of pulling one report every 4 months, which would then allow you to look at reports 3 times throughout the year, but then if there's a mistake, you're delayed in being able to compare them. However, since the pandemic, the different credit bureaus have committed to actually providing Americans with weekly reports. So at the time of this recording, while we are still in the COVID-19 pandemic, you can look at your credit report online on a weekly basis. What about your credit score? Your credit score is a number that is determined by your credit history. It ranges from 300 to 850. 300 being the lowest you can have, and 850 being the highest possible score. Your credit score consists of your payment history, which represents approximately 35% of your score, the amount that is owed, which represents 30% of your score, the length of your credit, which is 15%, the types of credit, which has a weight of 10%, and any new credit, which is worth 10%. Although we know these different percentages, the exact calculation is a proprietary model that nobody really knows. There is no guaranteed access to credit scoring, but there are a number of ways that you can look at your credit score, either through free or paid options. Right now, there are two main types of credit scoring models. The first one that I'm going to discuss right now is FICO. FICO is a predictive model that was created by the Fair Isaac Corporation in 1989. It is intended to predict your credit worthiness, and then there are different types of FICO scores. There's just your basic FICO score, which is a FICO 8 or a FICO 9. The 8 and the 9 are just different versions that are released after a couple of years. 9 being the most recent version. It is not widely used because it is too new. There is also a FICO Auto, and your FICO Auto is the score that lenders use when you are getting a car loan. There is a FICO Bank Card. The FICO Bank Card, I think it's pretty self-explanatory again. It is the score that is looked at when you are getting a credit card. And then there is the FICO Score 2, a FICO Score 4, and a FICO Score 5. And these are the scores that are looked at when you get a mortgage. The 2, the 4, and the 5 represent the different credit bureaus that they're associated with. The FICO scoring model is used widely by lenders. 90% of credit decisions in America are made using a FICO score. The next type of scoring model is the Vantage score. The Vantage score is also intended to predict credit worthiness. It is a predictive model. However, it is a much newer model. It was created in 2006 in collaboration with the 3 credit bureaus with the intention of competing with the FICO scoring model. It is widely available. When you see advertisement for CreditKarma and the Intuit products, meaning either TurboTax, QuickBooks, or Mint, they are advertising their Vantage scores. But you need to know the Vantage score can widely differ from the FICO score. It is growing in popularity, but it is not very widely used. So if your Vantage score and your FICO score are miles apart, remember that your FICO score is what's going to determine the outcome of your credit application. If you are enjoying this video so far, don't forget to hit the like button so the algorithm knows that it's good. And of course, subscribe for more content. If you think any of the information that I provide here might be helpful to somebody else, be sure to share it with them. How can you check your score? Some paid and some free options. And you can see on the screen that I have 4 different ways that you can check your FICO score. The first one is to go to the source. If you go to My FICO, you can get various FICO scores for all 3 credit bureaus. This is going to be the most accurate information. The score that you see is exactly how lenders see you. All of the different types of FICO scores are available. Another way for you to check your FICO is through Bank of America. That one is a free service. It offers only the FICO from TransUnion. However, you must be a customer. If you are an American Express customer, you also have the option of receiving a free FICO score. This one comes from Experian. And finally, the 4th way that you can check your FICO score is through Discover. It is a free service. It requires no commitment. You do not have to be a customer of Discover in order to be able to access your Experian FICO score. It is available to everyone. On the screen, again, you can see that there are 3 ways for you to check your Vantage score. The first way is a very popular one. We have all seen the ads on TV. The Vantage score that you receive from CreditKarma is a collaboration between Equifax and TransUnion. You can also see your Vantage score through the Intuit products. That one is a TransUnion Vantage score. And the third way for you to check your Vantage score is if you are a Chase customer, you are going to be able to have access to your Vantage score, and that one is an Experian score. All 3 of these are free options. Here are some additional resources I think might be helpful. I will be posting these links in the description box of the video.